Hello everyone. The insanity in the US market continued yesterday as well. S&P 500 opened 3% gap down and then dropped to negative 7%, almost erasing all its Wednesday gain and then recovered 4%. So in this video, let's discuss what happened yesterday in the US market first, then followed by we'll discuss our regular pre-market report for today, 11th April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. On Wednesday, Trump paused his reciprocal tariff on all the countries he imposed on April 2nd for 90 days with the exception of China. And for China, he posted the post in social media that he is increasing the tariff to 125%. In response to the President Trump reciprocal tariff pause, US market rallied around 10% in one single session, which all we discussed in detail in the last video. In line with that, yesterday, European market increased 3 to 5%, Japan market increased 9%, and surprisingly, even Chinese and Hong Kong market increased 1 to 2%. As a response to all this Trump action, yesterday, Chinese Commerce Ministry informed the press that their door-to-trade talk is always open, but any dialogue must be based on mutual respect, which is a decent response, but it appears China is not going to come down for negotiation and Trump also not going to call China for trade negotiation. So as expected, last night US market realized the problem that these Trump action are increasing the trade tension with China. So all three major index opened 3% gap down. Then yesterday afternoon, White House clarified the statement that Chinese tariff is not 125%, rather reciprocal tariff 125% plus surcharges 20%. So together Chinese goods into US is 145%. Which then pushed down the S&P 500 negative 7%, but after that as day progressed it recovered some. So last night in the end, VIX again increased above 20% and moved above 40. Index wise, Dow Jones was down by 2.5%, S&P 500 decreased 3.46% and Nasdaq crashed 4.31%. Basically, 30% of the Wednesday gain was erased in the US market last night. In fact, yesterday, all the macros that released was very favorable to the market. Before the US market opening, US government released the consumer inflation for March month. If required, please pause and have a look. In all four metrics, both headline inflation and core inflation came less than the analyst expected and way less than compared to February month. In fact, in the headline inflation, month-on-month basis, it actually decreased by 0.1% compared to 0.2% increase in the February month. So, it's a deflation. This is the most encouraging macro that US market can get. Very low inflation, only 2.4%, which is closer to the Fed 2% target. And this now increased the chance of more rate cut this year. However, market completely ignored this inflation data. Just for info, I have been making pre-market videos for last 2.5 years and out of all the time, as far as I remember, this is the first time US market didn't react for the US inflation. Basically, Trump completely overshadowed it. And about GIFT Nifty, we know yesterday morning it increased to 23,400 mark. From yesterday night 9 p.m. it dropped all the way down to 22,700 mark. But today early morning, because of US market trimmed some of its losses, our GIFT Nifty also trimmed some and traded at 23,033. Equating that with the spot market, still indicating the respectable gap up opening of around 500 points. But not crazy 1000 or 900 points gap up opening which we discussed yesterday. Regarding Indian ADR, all the major four also trimmed some of its positive run it had on Wednesday. Especially IT stocks, Infosys ADR was down 4%, Wipro ADR was down 2%. In case of banking stocks ADR, both of them was down around 1%. However, if we calculate the arbitrage, both the IT stocks showing positive difference of around 4 to 7% and both banking stocks having positive arbitrage of 2%. Reliance GDR closed 2.5% positive but on the European time. So I think it's having the arbitrage difference of 1 to 2%. So those were the things happened on the dollar market. Let's look at some India related info. Just for info, some US analysts predicted this. At present, iPhone 16 Pro Max in US is costing around 1200 US dollars. Now, as a result of this higher China tariff 145%, this could potentially increase the same phone price to around 2300 US dollar. So obviously Apple don't like this and they want to get around this since US is their biggest phone market. Hence, as per Reuters.com, in the next 90 days, Apple is going to airlift 600 tons of iPhone from India, which will be roughly 2 million units. Again, in the same article, they mentioned that Apple successfully lobbied with Indian airport authorities and with the Tamil Nadu government. Thus, they reduced the custom clearance hours to 6 hours from earlier 30 hours. You might ask why I'm telling this. Apple is not listed in India, isn't it? I mean, because of this high tariff in US for China goods, all these similar product companies now will be looking to buy from different countries like India. So I guess this will be a golden period for Indian textile business who exports already to US, and also this will do massive help for rupee stabilization. Hence, all the investors weigh all these stuff and this potentially might bring back the FII to Indian market. I mean, the patriotic me wants the China tariff to continue so India can be benefited, but the moral me is against it. Anyway, in short, the shift in US policy might help India in the short run. About institution, in the cash market last Wednesday too, FI was net sellers. They net sold for 4,400 crore rupees, whereas DA net bought for 3,000 crore rupees. Then coming to participant-wise open interest analysis, in the index option market, because of weekly expiry, last Wednesday 30% of the open interest was either unwound or expired. Then based on the remaining open interest, at present retail traders having net 7.5% open interest on the bullish position, whereas both FII and proprietary traders holding net 2.3% and net 3.8% open interest respectively on the bearish position. Meaning from Wednesday closing, retail traders makes more money if market goes up. On the other hand, both FII and proprietary traders makes more money if market goes down. So this is the first day in all my open interest analysis, market might go in favor of retail traders. Hence, we can expect huge position adjustments from FII and proprietary traders. Either they might make this more bullish or they might fight to pull down the market in favor of them. So today it will be interesting price action to watch. As a summary, US consumer inflation data was good, but because of Trump action, US market closed negative and global momentum deteriorated. However, Wednesday positive global momentum haven't materialized on the Indian market. So for now, both Indian ADR and GIFT Nifty all indicating the gap up opening of around 500 points. Then, as per stock open interest, Muthoot Finance, Phoenix Limited, National Aluminium, Dr. Reddy and Hindustan Zinc are some of the stocks that got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Max Health, Apollo Tyre, NBCC, Cummins India, Britannia, D-Mart and Ashok Leyland are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, during our market hours between 11:30 am to 2:30 pm, UK GDP data, UK industrial production growth data, then Germany and France consumer inflation all are scheduled to release. In the aftermarket hours, India's March month consumer inflation data is due, which analysts expecting it to be around 3.6%. I mean below 4% for the second month in a row. If it comes, then it's very good. In addition, India's industrial production and manufacturing output, all important India-related macro are also scheduled to release. Then finally for US, their Michigan consumer sentiment data for April month are some of the items we need to keep an eye out today. Then coming to technical, last Wednesday, Nifty opened 80 points gap down and traded lower throughout the session, then closed at just below 22,400. Thus on the daily chart, Nifty formed a small bearish candlestick pattern resembling an inside bar formation indicating range bound trading, but it sustained well above Tuesday's low of 22,270. So that 22,270 is the significant support. In case if Nifty opened about 23,000 mark means, then 23,200 to 23,400 is the immediate resistance zone. In case of Bank Nifty, it opened 20 points gap down and was negative throughout the session, then closed at 50,240. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern with a long lower shadow indicating buying interest at lower level. On the positive side, Bank Nifty defended the 50,000 mark and sustained about above medium to long-term moving averages, which is positive, while hovering around the 20-day exponential moving average for another session. In addition, RSI momentum indicator still held above the 50 mark, while MACD momentum indicator maintained an upward bias, though below the zero line. Hence, a breach above 50,500 could trigger the sharp short covering, potentially leading the Nifty higher. As per the weekly options data, the maximum call option open interest was at 23,500 strike, followed by 23,000 and 22,500, with maximum new call option rating at 23,500 strike and then 23,000 and 22,400. On the put side, the maximum open interest was at 22,500 strike, followed by 22,000 and 22,400, with maximum new put option rating at 22,400 strike and then 22,000 and 22,500. Thus, from options data, Nifty's trading range might be between 22,000 and 23,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.